We are live. It is Good Friday. I guess it's always a Good Friday, Phil, but it's Good Friday today, and it's also a Good Friday. And thanks for joining us. Let's get started here. All right. Hello, Smarty. I'll do that again. I got, got marbles in my mouth today. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with my good friend Phil Weiss. Hey, Phil.
Hey, Kirk, it is a good Friday, and thanks for having me today. Good to be here.
Yeah. Well, thanks for joining us. Kind of one of those weird days. One of my kids has school, the other doesn't. We just actually got back from little stick and puck at the rink again. Just what else am I going to do with him? He's home all day on a Friday, so gives me a good excuse to get out there with him and have a good time. And the rink's closed another 2 weeks, and that'll be it. So yeah, so this is interesting. So it's Good Friday. The market's closed today. Stock and bond markets are closed today, which is always interesting. And yeah, so it's good. But we're talking about a bunch of stuff today. It's been a crazy week. We had I want to talk to Phil about this. We had a bridge. I'm sure everybody's seen it by now, but there was a huge bridge collapse in I think it was in Maryland, and it was right outside of Baltimore. Phil, is that what it was?
That's right. It was the Key Bridge. It's like close to 50 years old, and I know I heard the news, saw the news when I woke up earlier this week, and I was kind of shocked. And then trying to figure out what might have happened, and your first thought is like somebody really messed up, but it wasn't that. the The boat lost power. The ship lost power.
Mm.
And a ship that size, it's not easy to control. I was reading like you can try to drag anchors across the bottom to slow it down, but if you mess that up, the sides of the boat can be sheared off. They were really fortunate that because they were aware of what was happening, the ship alerted shore. They cut off traffic, so we didn't end up with cars plunging into the water. There were some workers. Unfortunately, I think it was six. They found the remains of two, and they suspect the other ones also perished. But beyond that, it doesn't seem like it had a lot of impact on lives, but it's going to have a huge impact on sea commerce, because that was it's not the largest, but it is a large seaport. I read there's 50 million, I believe it was, of commerce through there. And plus, it's going over water. It's not like there's going to be a lot of other alternatives to get around. That makes it a lot harder to get around because of it. So not something that can easily be fixed either.
Yeah, what was it? The Suez Canal that got blocked like 2 years ago because a ship turned sideways and they couldn't get it out, and then the water dropped. Was it the Suez, or was it? I don't think it was the Panama Canal. Was it Suez?
I think it was the Suez. I think you're right.
Yeah, I mean, I remember I think it was whatever, maybe it was 2 years ago, but yeah, this big tanker like blocked the Suez Canal, and they couldn't unblock it. Like it turned, and I don't remember why, but it hadn't been dredged properly, so it was narrow, and so when it went sideways, it just couldn't, it couldn't undo it. You have to wait till the water rises and all this stuff, and it was just what it does is it brings up this idea that there's actually two ideas I want to share. One is that our infrastructure is something that we don't notice on a day-to-day basis, but it's so important to commerce and our economy, right? It's like, oh, COVID happened. Let's shut down the global economy, right? Well, you can always restart that. But when you have a ship blocking one of the major ports or thoroughfares in sea traffic, now you don't get your goods, and now you got all sorts of other problems, right? And this is where inflation can pick up because, hey, we can't get the goods. Well, we need the goods. We're going to pay any price, so the price is going to go up, right? Because we can't get them, and then it gets fixed, and we're like, all right, now we got tons of stuff coming through, and now the prices go a lot lower because, hey, we got too much stuff there. And these are things that happen when you have a global economy that is a finely tuned machine like it was prior to COVID. It was so finely tuned that it wasn't resilient. It was efficient, but not resilient. And so when you design systems on efficiency rather than resilience, you're subject to one off occasions, right? And there's this concept, Nassim Taleb talks about this, the concept of fragility. And what he talks about is, I every once in a while I give a talk on this topic of resilience because it fascinates me. But when you think about there's really two extremes, and then there's kind of a middle. right? One extreme is fragile. The other extreme is anti-fragile. In the middle, you have resilient. So if you think of fragile, an example might be, let's say you decide to sit on the couch for the next 20 years. Well, you're never going to get hurt, right? Because you're on the couch. What's the worst thing that can happen? You fall off, right? You live in your house. You never leave your house. The chances of getting hurt or injured or sick are close to zero. Great. However, if you do that long enough, eventually you become unhealthy, right? You're sitting on the couch, you're eating chips, you're not exercising, you're not getting sunlight, all sorts of stuff. And eventually you get unhealthy. And so you become fragile, right? Immediately you're thinking, well, I don't leave the house, I'll be fine, right? No one's ever going to touch me. Now you become fragile because you're not exposed to germs or people or anything. And eventually you become overweight and unhealthy, and then you have other problems, right? You might have a heart attack, you might, be overweight and have other things, right? That is a fragile existence. You're eliminating your risk, right? Virtually, for this example, you're eliminating your risk, but because you're eliminating the risk, you're creating bigger risks later, right? Now, the example I always use for my talk is Tom the turkey, right? Tom the turkey lives a glorious life. Every day he gets fed. He wakes up, hangs out with his turkey buddies. He eats as much turkey feed as he wants. There's no risk. He's in a pen, in his safe pen, safe from predators. He just sits around and gets nice and fat. He has nothing to worry about. And then one day before Thanksgiving, whack, no more Tom the turkey. That's a fragile existence, right? Because you're giving up, you're seeking safety. You're giving up your risk in exchange for safety, and because of that, you're actually taking on much bigger risks. Now, an alternative to that is what people would call to the health thing is like hormesis, right? Hormesis is like, I don't want to get down the road of vaccines because I'll probably get canceled by YouTube or someone just for even mentioning vaccines, but and it's probably already happened because I mentioned the word. But if you think of vaccines, the point of them, right? We all get them when we're small. The point of vaccines is to give you a small amount of the foreign invader so your body builds up an immunity to it, right? So you're actually deliberately making yourself sick so your body builds up immunity to it. So next time you won't have the issue. But because they give you such a small amount, your body fights it off and now it knows what to look for and it's built up this immunity. So next time you see it, you're like, yeah, we've already dealt with that. You're good. Go somewhere else. That's why vaccines work, right? I'm not going to go into the efficacy of that. But anyway, that's why they work. That's the concept of hormesis. You're becoming anti-fragile, right? Anti-fragile is giving yourself the medicine, giving yourself the vaccine in this case, and giving yourself that virus to make yourself stronger against it. So next time your body's stronger. The principle holds true for going to the gym, right? You can sit around your house and you can become flabby and whatever, or you can go to the gym. Well, the concept of going to the gym isn't so you can throw weights around. It's so you can tear your muscles, right? You lift weights to tear your muscles. And what does your body do when you're injured? Your body repairs it. But your body doesn't just repair it, it actually makes it stronger. So the reason you go to the gym is become stronger. So you go lift weights, you tear some muscles, you get really sore. 2 days later, you're healed up and you can lift more weights next time, right? Because your body's becoming stronger, right? You break a leg, it heals, it's stronger in that place because your body doesn't want it to break again. That's the concept of anti-fragile. Now, resilience is a little different, right? Resilience is basically coming up with ways to bolster yourself against the tough times, right? It might be storing goods in your basement would be resilience, right? Or being prepared for bad times. So all these concepts are really important, whether it comes to commerce or really the markets. I mean, I'm trying to segue this into the markets very poorly, but this is really a concept that you need to learn about the markets, because if you're doing things properly, right? If you're looking at your portfolio and saying, if you're all in big tech, you have a fragile portfolio. If you're all in energy, you have a fragile portfolio. If you're all in crypto, if you're all in one thing, that's fragile. Now you could do really, really well, or it could go down a lot and you lose all your money. Like, that's fragile, right? The point of diversification is become resilient, right? Now that's not anti-fragile, right? So you diversify into all these different funds and stocks and bonds. That becomes resilient. So when the market goes up or down, you go up or down little less, right? That's the point. Anti-fragile is when the market goes up, you go down, and when the market goes down, you go up. So it's really reversing it. So the concept of resilience is really about bolstering yourself against good and bad times, right? So in the good times, you take some of the profits off the table, you put it away, you put it in a nest egg, and you put it in the safe. And then when bad times come, you take that out and you use it, and it makes it less bad. So that concept's really important, and this is where the global infrastructure, especially in the U.S. infrastructure, the U.S. infrastructure is poor. It's piss poor. I mean, you look at the rankings all the time, and it always gets. I think the highest ranking is like a B minus, and that's like one single thing, and everything else is like a C minus or a D or an F. And we just don't put money into our infrastructure because, hey, why do that when we can line the pockets of our favorite lobbyists and other things? Let's wait till something blows up, like a bridge, and then we'll put money into that and say, oh, well, it was because of this. Now, I want to share a different concept, but Phil, what do you think of the concept of fragility in your line of work, and when how does it come into play with you?
So you made me think of a great example. You ever get a new client and they're really conservative and they're all invested in fixed income, but then they're really not invested as conservatively as they think because they want income, so it's high yield. And then they look at their returns when the market's going up and say, my returns aren't that good. Should I go and put it all into a high interest savings account? I've received emails like this. Well, that's not what you want to do, because that's, in the long run, you're going to end up lagging inflation. Your purchasing power is going to go down, and you're not going to be able to accomplish your goals and live the kind of life that you want because you've actually limited your returns by doing that. I understand that markets don't always go up, but that's why we diversify, right? That's part of being resilient, is that diversification. But sometimes we get so scared that we have this really fragile portfolio that's not going to do what we want, and it doesn't really have the capacity to do it because of how it's set up. You have to understand what you own. Right? If you have a portfolio that's full of high yield bonds, it's really risky, right? High yield bonds are right after stocks in terms of the risk, and you're really not going to get a lot of growth. I mean, yeah, if a company's credit rating improves, the value of the bond's going to go up, but you're really just hoping you're going to get your interest payment, and those companies can go bad. That's why they're high yield debt. Right? That's what we get junk bonds. There's a reason that they're called junk bonds, because they don't all make it through. So to me, that's a great parallel from an investing perspective of exactly what you're talking about. And just to get back to the boat thing for a second, the other thing that happened besides what you talked about with the Suez, I know my business partner, her son is in the maritime industry, and they had to take so much more time this year to go around to get to the other side of South America because there wasn't enough rain, and the ship couldn't go through the Panama Canal. So that's something else that can happen. So then it becomes, not only does it take longer, it's much more dangerous, because going around, it's called the Horn, of Latin America, South America. That can be dangerous. The waters are pretty treacherous. So those kind of things, right? That's where the infrastructure matters. And our infrastructure here is, as you said, it is piss poor. Look at the electric grid. We can't move things. Like, there's a lot of alternative energy sources that we can have, but we don't have a way to move them around.
Yeah, and I do want to bring up one more concept here that associated with the boat is, and this is the second time it's happened, so I actually like using these two examples. So when the boat, took out the bridge, as you said, no one's really to blame. It just kind of happened, and I'm sure you can find someone to blame. Here's the thing: anytime something bad happens, people always need someone to blame. What happened? Who can we blame? This is somebody's fault. And they're going to pick off Joe Sixpack, who just got hired, in the maritime industry. And they're going to be like, it's his fault. And they're going to blame it all on him. But they don't really know it's him. We as human beings need closure, right? We need closure. So if there's a question out there and nobody has an answer, they'll make up stuff. Now, my wife did when she was in, she got a master's degree in design, and her final thesis was a concept of the void. And I love this because I always come back to this. I'm like, this is such a cool concept of the void. Like, you're creating a room, you're creating a void in the room. Like, there's a space. It has to, you don't fill it. Like, it's deliberately empty, and it creates a feeling. There's that void in the space. And so I always think about this. I'm like, the void, like, what is the void we're trying to fill, right? What's the meaning of life? I don't know. But, let me go find someone with an answer, right? Let me go find some sort of guru or religion or whatever. It's like it gives you the meaning of life. Oh, okay, now I have an answer. I feel good. But people feel unsettled when there's no answer because it's our brain kind of taking advantage of us. They're like, whoa, like I can't handle this. There needs to be an answer to this question. It kind of also kind of ties into the concept of I think it was the Zeigarnik effect, the open loop. Basically, I'm not sure if that's the one, but it's an open loop. The show's 24 started this. You start the show, yeah, and then at the end of the show, you leave a cliffhanger, and you're like, oh my god, what's he gonna do? What's Jack gonna do now? And then you're like, I can't wait till next week, and you're on pins and needles all week, and then the show starts. 5 minutes, they wrap up the cliffhanger, and then they get onto the show. And then at the end of the episode, oh no, another cliffhanger, something else is gonna blow up, right? Like that's the open loop. 24 was the first show that did it, and it was just mind-blowing. Everybody loved the show. So now every show does this. And if you go on Netflix, the reason you binge watch is because you can't stop watching. I know, because I have this problem. So if you look at the psychology of it, right? If you understand the psychology, it's really important. So if you look at the boat disaster, I don't know if anyone's to blame. It doesn't sound like it. I mean, you're probably following this closer than I am, but it sounds like nobody's at fault. But I guarantee you they're going to find someone to blame because they have to. Because this stuff doesn't happen on its own. That would be scary. You mean random chance can happen in life? No, that's not possible. We need somebody to blame. Somebody's at fault here, right? We need to pin it on somebody so we can yell and scream and say, this is never going to happen again. And we're going to put this person in jail for 500 years, even though they were off duty or something, right? So I think it's important. And I'll use a second example. So we had locally, we had hockey playoffs for high school. And I believe it was St. John's versus Winchester, and it was tied. I forget the score. I think it was 2-2, but it was tied going into like seconds left in the game. St. John's comes down and scores, but in the replay, it was like 1 or 2 seconds after the period ended, but the horn was delayed. So you can see in the replay, the light went on, like period over, and then it went in, and then the horn goes off like a few seconds later, and it clearly was after the end of the period. But because there was no instant replay, because the refs, like they can only watch so much at once. Like they didn't see it. Like they went back and talked. They're like, it stands. But you can't blame the refs because the refs, their job is not to like, oh, well, it was this close. And like, they can't do instant replays. A whole bunch of reasons why it didn't happen. And I guess St. John's ended up winning. But the point is, you watch like the podcast and the news, and you're like, oh, it's a fault. It's the refs. They were doing a bad job, or it's this person, it's that person. It's like, there's really nobody to blame. It's a crappy situation. One team that worked really hard to get into the finals loses when they shouldn't have lost. They should have gone to overtime. The team that won, they can't feel too good about that. Like, how do you feel good about that? You're like, yeah, I won, kinda, with an asterisk. Right? Like, do you want to, look, I get it. Everyone wants to win, but do you want to win that way? Right? It's like, do you want to win by cheating? Like it's like, I'm not saying they cheated because nobody did anything wrong. This is the point. Nobody really did anything wrong. There's really nobody to blame. It's a bad situation that happened. It's too bad. I feel bad for the losing team because, maybe they would have lost, but hey, they were going into overtime and they were tied, and they probably still should have gone in overtime. And I guess maybe if I was a coach, I'd be like, you know what, just I don't know. It's a tough situation. There's really no easy answer. But the point is people are always looking for someone to blame. Somebody sent me a copy of a local podcast, and it was like a half-hour show about blaming somebody in this situation. It's like there's nothing you could do. You just got to say it sucks. It's life. It's random chance. You could blame the rink, you could blame the league, you can blame this. At the end of the day, what are we going to do? We're human beings. We're going to say, oh, that was bad. Let's fix it. And not only let's fix it, let's spend 20 times the money we need to fix it so that it never comes close to happening again. Oh, the bridge wasn't built right, or the boat needs 50 more redundancies just so this never happens. And so you got the government up your wazoo trying to like keep everybody safe. And it's like, sometimes these things happen and it sucks and people died, and I'm not making light of it, but it happens, right? I mean, God, hundreds of years ago, like people died every day for no apparent reason, and now like everyone's so fragile because we're not used to, because we've like taken the risk out of so many parts of our life that when these things happen, it's like, oh, it's a tragedy, which it is. But if you went back like hundreds of years, it'd be like, okay, well, let's rebuild the bridge and move on. It's just like people die every day. People had 10 kids and only 5 of them survived because of various reasons, right? That doesn't happen now, but it did. So I just bring it up because I think the overlay works for life as it does in the markets. And I'll give you a market example, then we'll move on. But I remember back in, God, when was it? 2015. Wait, I don't know, somewhere around 2015. Anyway, it's when gold peaked. I don't have a chart in front of me. So gold peaked. Maybe it was 2012, somewhere in there. Gold was going on like a bull market run, like one of the biggest runs of my lifetime. Went from, well, actually not my lifetime, but I was young when the last bull market happened, but recent lifetime is, if you look in like 99, it bottomed and it just like skyrocketed until I think it was 2012. And it just went through the roof, right? And then it went down, and then just kind of like went sideways for a little while. And then April 15th, it was like if you guys understand technical analysis, there's like support and resistance, right? Resistance is the top. You try to break above the resistance. Support is the bottom. You're trying to break below. So if the market's going above to a resistance and down to support, if it breaks through, it usually breaks through hard, right? If it breaks through resistance, it breaks through hard, right? That's the whole point, is once it breaks up, it's a bullish sign. So what happened April 15th, I remember this because I was in the airport, and it was tax day, right? So this is how I remember it, because otherwise I wouldn't remember the date. It's tax day. I'm in the airport. We're going on vacation, and somebody calls me. We're like, what happened to gold? I'm like, I don't know. Like, it's just bouncing around. They're like, no, it's dropped like 5% or whatever it was. It broke through the floor. So I'm looking like, wow, that's crazy. I mean, it's gold. You own it for good or bad or whatever reason. But the point is it had broken through. Some people were freaking out. They're like, oh my God, it's going to go zero. That's how people act. And what was interesting was, after the fact, I started to analyze it. I'm like, why did this happen? Because by all means, fundamentally speaking, it should have been fine where it was. So I read the news. All right, what did the news say? I looked at a bunch of different news stories. Every single one of them was different. Every single news story was different. Their reasoning for why gold broke down was different. And in further analysis, because I was very curious, upon further analysis, what I realized is every single one of those stories is wrong. And there is no possible way anybody could know the answer to that question. There might be 5 people on this earth who might have known the answer to that question. It depends on what happened, which, unless you're in the bowels of the financial system, you might not even know. And if you're down there, you still might not know. Now, people blamed it on China, dumping their gold. They blamed it on a fat finger trade again. They blamed it on, a computer error. I mean, it was so many stupid stories, and every single one of them was wrong. And the reason I know they're wrong is because there's no possible way the reporter could know the answer to that question. I also know, even if they had a source, there's no way that anyone could deduce the answer to that question, to the answer they gave, right? Oh, it was a fat finger trade. Really? Who did it? Right? Like, who gave the fat finger trade? Is it a person? Like, tell me who it was. Oh, you don't know? Okay, so you really don't know it's a fat finger trade. Oh, it was a computer error? Great. Let's look at the log. See what happened. Oh, you're just guessing? Oh, okay. Oh, it's China. Really? Did they come out and confirm that? No? Okay, so you really don't know. So if you look through all of these stories, you realize that there really is no way to answer the question. But because we're human beings, we require an answer. So all of those 10 or 20 stories had an answer, and it made everybody feel better. Oh, okay, that's why it happened. But in reality, we didn't know the answer, and you're never going to know the answer, and you have to be comfortable with the fact that you're not going to know the answer. And that's why when you look at the fundamental analysis, it can be tricky. Oh, what happened? Fundamental. Phil's a fundamental guy. Things have to make sense. Numbers have to add up. Things have to make sense. When things don't make sense, that's where the technical guys come in, because they're like, well, it makes sense because of this chart and this chart, and I'm going to make up a chart and make it all make sense. But the reality is many times we don't know. And that's why price matters most. It doesn't determine right or wrong. It's just the price is the final arbiter. The price is the price. It is the truth. And you don't have to agree with the truth. You don't have to disagree with the truth. It is the truth. It is what it is, right? It's just like, oh, it's the middle of the day and the sun's out. Okay, that's the truth. I can deny the fact the sun's out and say, no, it's cloudy, even though I'm getting the sunburn, but the fact is the sun's out. And so when you're trying to find answers to questions in your mind, like, why is Bitcoin going up? Well, it's because all the institutions are coming in. Maybe, maybe not. Like, I don't know. Like, so I think we have to get away from this idea of chasing the truth. We need an answer, and realize in the markets, that's just not going to happen most times. You just have to accept that it's going up or it's going down. And over the long run, fundamental people should be right if they're good at their job. Over the long run, they'll be fine. In the short run, they won't. In the short run, we have no idea why things move. There's millions and millions of people buying and selling every single day, except for Good Friday, of course, because we got the day off. But, every single day, people are buying and selling in the markets, and that determines the price. That's it. If you have more buyers and sellers, price goes up. More sellers and buyers, price goes down. That's the answer. We just it may not be good enough for people. If people feel like, I need more of an answer than that. Okay, well, good luck, because you're never going to find it. You're going down a rabbit hole, and there's not an answer at the end of it. There's just more questions. So I don't know. What are your thoughts, Phil?
As you're telling that story, I'm thinking back to when I was an analyst, and I covered energy stocks, so oil and gas. And I used to hate the question, Phil, why is this stock moving today? Or why are oil prices moving today? I don't really know for sure. It's just all guessing. There's no way to know. I always love to tell people when you ask me, so what do you think is going to happen? Well, my crystal ball is both cracked and cloudy because I don't know. And that's really all I'm doing is I'm guessing. And the reason that I would get asked those questions is just what you said. People want answers. Even if they're not right, even if there's not really a basis for them, they just want an answer. They want an explanation. You go back to the ship for a second. Like I was listening to a podcast earlier today, and they're saying some people, I don't want to get political. I'm not going there, but people were blaming it on DEI. People were blaming it on the right. People were blaming it on the left. None of us had anything to do with it. The ship lost power. It wasn't a conspiracy of like somebody tried to break the grid, like all these things. It's just people want answers and they want to blame. So it's not just wanting answers, but then they want to blame somebody because it makes them feel better if they can find somebody to blame, to pick on. And it's really not the right way to go because, Mark, as you said, the bottom line is when something goes up, there's more buyers than sellers. When it goes down, there's more sellers than buyers. That's the only thing that we know for sure.
Yeah. Yeah, it's funny. I'm going to share a news clip. So I went on Google and I just typed in recent inflation, I think was the metric. Anyway, so I got the top stories. I actually like this little snippet because it just shows a bunch of headlines from different places. So this is top stories, Federal Reserve's February inflation gauge. If you read through them, you'll see U.S. inflation ticked higher last month, reversing some recent progress. Inflation gauge shows price pressures easing. Fed doesn't need to be in a hurry to cut rates. Inflation gauge rose 2.8 annually in February as expected. Inflation down from its peak. Fed is prioritizing its dual mandate more. Gold price rally isn't about inflation this time. Like if you look at all these, they're all over the map. Some are saying one thing, some are saying another. And Fed's favored inflation gauge rose 2.5% in February. I mean, like if you look at all these, you're like, these are all over the map. Like, what are they trying to say? I have no idea. They're just trying to get your eyeballs to click. Like you're gonna find one. You'll be like, ooh, I like this one because it aligns with where my head is. Are you gonna click on the one that's against your thinking? No, you're not. You're gonna click on the one that aligns exactly how your brain is wired. You're thinking, oh, I don't think the Fed is going to cut rates. Ooh, let me click on the Bloomberg article. It says they reiterate they don't need to be in a hurry to cut rates. We've been saying this in the show for like a year. Like they're going to stop around 5.5, and then they're going to stay there. And everyone thought in December, hey, we're going to cut rates like 6-7 times. I'm like, nope, that's not going to happen. And slowly we're a quarter in and we're no further to cutting rates. And according to this, Powell reiterates, don't need to be in a hurry to cut rates. Yeah, no kidding. Thanks, Jerome. You could have just listened to the show. We would have told you that. And so I would click on that one because that aligns with my thinking. And I'd look at this other one and it's like, ooh, I don't know if I want to click on that because that doesn't agree with me. And so we live in this world where we're constantly seeking affirmation for our opinions. And the younger generation gets this more, unfortunately, and that's why things like TikTok and social media is so dangerous, because it sends people down a rabbit hole and sends them along the line. It basically causes people to get more extreme, because if you think that the Democrats are the devil or the Republicans are Hitler or whatever the meme is today, then you're going to follow that train. And the more you follow that train, the more they're going to align you with that thinking, and they're going to send you more posts along with that thinking, and you're going to constantly see consistent confirmation that you're correct. You're not going to see the other side that says, well, actually, your side's Hitler and your side's the devil. Like, you're not going to see that, because the algorithms of social media is going to show you what you want to see. They're never going to show you the other side. And that becomes problematic. And, in my opinion, this is one of the factors into the extremism in this country is social media. You can blame it on the extremist groups, but they've always been here. They haven't changed. You've always had extremists. They're never going away. We've had communists in this country even when we were worried about communists. Like, it was the thing. You had freedom of press. You had freedom of speech. Like, you could be a communist. It's okay. We don't have to agree. But, there's a certain percentage of the population that fit that, right? And so, the thing is when you're constantly seeking that affirmation, you're going to find groups that confirm that and agree with you, and then you're going to align with those groups. So the extremism, which I don't even think it's that extreme, I think it's more media driven, but the media makes it seem extreme, and then the rest of us are kind of like, I guess I agree, but I'm not going to go take a gun and hunt down my foe in the next quote unquote civil war everyone's afraid of. But it's just not gonna happen. And so, but the social media does send people down these rabbit holes because it continues to align your thinking with similar thinking, and it's not contradicting it. So if intelligent people, I forget who said this, if it was, I don't know, it was Mark Twain, or if it was, who's the guy who wrote The Great Gatsby? I'm just drawing a blank. Jesus, this is a Friday. Anyway, so one of the famous authors said this. He said, the sign of a first-rate intelligence is somebody who can hold two contradicting opinions in his head at the same time and still function properly. I paraphrased it, but that's basically the thing. You need to be able to do that if you want to have success in any realm in life, in the markets, socially, economically. You need to be able to be mindful of both sides and say, okay, you both have a good thinking around it. I agree with this. I don't agree with this. And it helps make you a smarter person. But if you align yourself with one side or the other in the market, whether you're a bull, a bear, or a Democrat, or Republican, you're going to miss so much, right? You're going to miss the truth. And nobody really knows the truth if you really get into it. But you miss more of the truth because you're blinded by sending yourself down one side. In the market, this happens all the time. I hate talking about politics, so I'm going to take this back to the market. But this is this goes into the market, right? You're a permabull, you're a permabear. No matter what happens, talk to any crypto permabull. No matter what happens, they always will give you a reason why it's going to keep going higher. Every single day. It's going down, it's going up next week. I'll tell you why, because this is going to happen. Then that thing happens. Oh, well, it's going to happen next week. It's like these people think the world's going to end on this date, and it doesn't end. They're like, well, actually, we misinterpreted it. It's 5 years from now. And there's always some reason to get people to think that, something's going to happen. Same thing with permabulls and permabears, is they always have this same thinking, and they can't change their thinking because they're not mindful of the fact that they could be wrong. I mentioned this in the show a few weeks ago, and I'm not going to mention the person's name because he's got more money than me and I don't want to get sued. But I heard a debate between two thinkers in this space, and one of them sounded like complete buffoon. And it was, no matter what, the other one was asking good questions. He asked a question to the guy because it was a debate. He's like, so at what point do you think that your opinion would be wrong? He's like, I'm not wrong. He's like, I can't be wrong because this and this. And he goes off on a tangent. He's like, yes, but at what point would you say, okay, I understand, I believe what I'm saying, but At what point could I possibly be wrong? And he's like, it's not possible. That's buffoonery, right? If you can't be wrong, you're a buffoon. Everybody can be wrong, right? We're never like, unless you know the future, you're bound to be wrong at something. And by the way, the same person also told people to short the market all the way up from 2009 until, probably still telling them to short the market. If you would have lost all your money had you listened to him. So I'm not going to mention his name. But point being is there's stuff like this out there. And if you keep listening to the same people, you're going to get yourself into trouble. You have to be able to discern right from wrong. You have to be able to discern people who are uniform thinkers where they can't change their mind. And they're useful, right? I listen to this guy. He's useful. He helps me contradict other ideas I have because he's bringing up ideas that I may not be agree with, and I'll say, okay, well, withstanding your ridiculous thinking, like, what's your argument? Okay, great. Like, you made some really good points, and I agree with that. It makes me smarter. I don't agree with him, but I listen to him because I know that he's well thought out and he has a good argument. It just may not make complete sense because like he's never willing to change his mind. But if I want to think about, all right, I think gold's going down, hypothetically, I'm not saying it is, and he thinks it's going up, be like, okay, what's your thinking around that? Why do you think it's going up? Okay, I hadn't thought of that. All right, let me go look at this, right? So as a thinker, we should all be doing this. We should all be looking for things that contradict our opinion. If we don't, we're just not as smart as we could be. And I think that's really important. What are your thoughts, Phil?
So you bring up a concept that I think I talk about almost every time we have these conversations, which is confirmation bias. That's really what you're talking about. We seek out people that share our opinion because we want to be right. And it's also why sometimes we have so much trouble communicating, because not only do we want to be right, we only want to hear people that have our point of view. We don't want to hear the other side. I went to a financial conference, a very different conference than the typical one, last September. And at this conference, there's not really an agenda. People that come, they present topics that they want to talk about. And my favorite session was, this is what we did. We went into a room and said, when it comes to politics, we never talk anymore. There's no agreement. There's no compromise. It's the Democrats or it's the Republicans, and that's it. And you're only going to do that, and you're going to stay with your party, and you're going to stick to the party line. So we were given an issue. The issue was actually gun control. And so it doesn't matter which side you're on. This side of the room, you take the liberal point of view. This side of the room, you take the conservative point of view. And I want you to have a conversation about it. And the whole purpose of the exercise was to force you to give consideration and think about how the other side thought about that issue. And it was a really helpful exercise, and it's something that we don't do. And this applies in investing as well. You like this stock, or you like this sector, or you like this asset class, whatever it may be. That's great. But don't just look for things that support your thesis or your belief. Try to understand, just like Kirk said too, the other side, because you might be missing something. You want to make sure you understand. And then also you can say, you know what, I don't really agree with what that other person said or that other point of view, but at least you're aware of it. So if something starts to change and that starts to become more likely than you thought originally, maybe it means that you should get out because you were wrong. But we don't want to admit we're wrong. We only want to find people that agree with us. You really have to guard against confirmation bias. I think it's one of the most important things that we can do when it comes to investing.
Yeah, I totally agree. I mean, so I want to bring up some images here, because in our trade publication, Investment News, they had some good graphs, some charts here, and I want to share some of them in part because it aligns with our conversation here. Here's one. So this is the upcoming 2024 election, which everybody thinks will lead to a civil war, and I think it's going to be a dud. Basically, what it says is, how much importance are clients placing on 2024 election season regarding their financial plans? And what I love about this is it's pretty evenly spread. People who said not important at all is 3%. And in my opinion, those are the smartest 3% in the group. 14% not very important. Somewhat important is 33%. Important is 33%. And very important is 17%. Now, the 17% are clearly driven by fear. Okay, and I'm just pointing this out. I'm not saying people are right or wrong because I don't know the answer either. But the 17% are driven by fear. The 33% who says important or somewhat driven by fear, and so you have to look at that as a gauge. And I look at this and I say that's an interesting segment of the population. How people think. Um, People think it's not very important. They're either they're smart enough to know that it's not very important, or it means they're not political. There could be a bunch of reasons, but the reality is we always think politics is important. And if you go back 100 years in the markets, politics actually has very little to do with outcomes in the investment market. Very little. And what's funny, and this goes back to the some of the things we're talking about today, is you know uh, we as citizens of the United States feel like the president is in charge and they're responsible for the economy. So, wow, the stock market's up. Good job, Biden. Good job, weekend at Bernie's, Biden. Like, that's all you, buddy. You did that. Or when Trump got in and we had a bull market, hey, good job, Trump. You did a great job there, right? And yet, the president has very little to do, if anything, with market performance. It's very low. It's so minute, it's not even worth measuring. Now, can they have an impact? Absolutely. There are things they can do to have an impact, but it's mostly not due to the president. They could have a bad impact, right? They could send us to war, like most presidents. They could. I will say that the one good thing Trump did, and I don't agree with 100% of it, but the one good thing he did is he's a promoter. I think we all know that. He's a really good promoter. That's like what he does. He promotes himself, but he's good at it, right? You have to give him respect, even if you don't like him. He's a good promoter. And he was a promoter for the United States. And that was actually a bolster. And in some ways, if you think about him, his job as president is the same job that CEOs have. The CEO's job is to be a promoter of the company and to get the stock price up and for growth and to help people in the company to grow and all that stuff. They make decisions, but they're basically a promoter. Like, that's their job, right? Every day they're out there promoting the company. A president's job, in large part, in this day and age, is promoting the U.S. U.S. businesses, U.S. commerce, like promoting rah rah rah, go USA, right? That's the president's job, in large part. It's not the only job, but it's a large part of their job. And I will say Trump did that well, right? And he didn't do everything well, but he did that well. And I think if that is something the president can do, that is a positive. Now, for the most part, anytime, like, I had this argument with a buddy of mine a while ago, and he's like, well, Bill Clinton was the best president because look at the stock market under him. Like, really? Did Bill Clinton invent the internet? I thought Al Gore invented the internet, right? Bill Clinton didn't do that. Like, he doesn't get credit for the internet boom. Actually, and I'll tell him, I said, he does get credit for one thing, in that he allowed the stock market to do what it's going to do. He actually, one of his theses is, hey, hands off. I'm not touching it. Because there are a lot of presidents who try to mingle in the market, good or bad. I mean, some have good effects, some have bad effects, but like a lot of them try to manage or mingle in the markets. He was just like, no, hands off. You guys do what you're going to do. I thought that was a very positive thing. Now, a lot of people don't give him credit for that, because how do you give somebody credit for something that didn't happen, or like that you didn't, like, you doing nothing? You don't get credit for doing nothing, right? It's like saying, I prevented, or it's kind of like in this country, it's like, oh, we prevented another terrorist attack. Well, it didn't happen, so how do I know you have any value? Like what was that movie, Wag the Dog, where what was it? Forget who it was. I can't remember the guy's name. Dustin Hoffman. I think it was Dustin Hoffman. I think it was Dustin Hoffman, who was in the car with the CIA director William Macy, and he goes in. He's like, "Hey, there's no war," and he's like, "What are you talking about? Of course there's a war." He's like, "We have satellites. We've seen it. There is no war." And he goes into this great monologue about well, this country, if the result, that like the end of the speech was like, and if there's no war, why do we need you? And William H. Macy's like, have a good day, sir. Like, all right, I agree. Like, if there's no war, then we're not needed. So go ahead, have your war. And it just brings up the fact that, all of this stuff kind of wraps together. So if you're thinking about politics, politics has very little to do with outcomes of the markets and has very little to do with outcomes of the economy. Does it have an impact? Absolutely. Is it significant? Absolutely not. But we disproportionately worry about it. So looking at this, the impact of elections and financial plans, that's not what it should be. It should be somewhere, the concern, if I had to put a concern on the elections, it would be maybe 10, 15%. What's the probability that the election will have a huge impact on the market? 10, 15%. I would probably also give 10% chance to aliens coming down and taking over the world, right? It's that low of a probability in my mind. Maybe it's 5% on aliens, but anyway. But the point being is if you really look at probabilities, it's really not high up on the spectrum. Now, if you look at this other one, which I think is really helpful as well, which is what is stressing out clients, and this is apparently a survey from clients about what's stressing them out. And so this is done by Janice Henderson. Yeah, it's a survey, I think, of their clients. And it says the U.S. presidential election, very concerned, are 49%, 29% are somewhat concerned. Persistent inflation, 35% are very concerned. Risk of recession, 29% are very concerned. Rising interest rates, 27% are very concerned. Poor stock market performance, 20%. So poor stock market performance is very low, probably in large part because the stock market's been going up for the last, since October, it's gone straight up. So everyone feels good. But if you look at this as a little disproportionate, the U.S. presidential election, which isn't happening for 6 months, is disproportionately concerning most people, and people are stressed out about it. So 78% of the people are very or somewhat concerned about the presidential election. Only 68% is persistent inflation. That could be because most people don't understand inflation, which is unfortunate, because if you want to know where the next governmental tax is coming, that's it. You don't worry about your tax rates going up. You can worry about inflation going up. That's going to do the same thing. Risk of recession, 61%. Rising interest rates, 56%. So you see it's very disproportionate for the presidential election, and yet it's probably one of the least important things on this list. Rising interest rates, that should concern people. Only 56% have any interest in it. And it's actually less than poor stock market performance, which is weird because that's just a residual effect of all these other things. Rising interest rates, in my opinion, should be the biggest concern that people have. Persistent inflation, that's just a new normal. Risk of recession, those should happen, even though we don't allow them to happen anymore. So anyway, I just wanted to share those because those are surveys of people that real life people that are thinking about this. And how do you compare? Like, are you in the presidential election category? Are you in the inflation? I'm not asking you to take a survey, but just think about what is the thing that's concerning you most in this day, in right now, and then think about what's the probability of it actually having a big impact on the market, because the election will not. It is going to have very low. Now, if we have an actual insurrection, wait, because the last one, you don't count like 21 people with billy clubs as insurrection, right? That's not going to take over a government. But anyway, I don't want to go down that track because someone will cancel me. But the point is like, are we going to have a civil war? No, we're not going to have that. And anyone who's telling you that's just trying to get your fear sensor up. But if you're looking about what's worrying, yeah, a recession should be worrying. Right? High inflation or persistent inflation should have some concern, right? Eventually that's going to impact people. It's starting to. We didn't have any chance to go over the charts in the show this week. We'll probably do it next week. We got tons of charts, but yeah, here's one. I'll share one before we kind of give it to Phil to wrap it up. But here's one that I saw and I had to share it. Interest rates on U.S. credit cards. So this chart is comparing 30-year mortgages, auto loans, personal loans, and credit card. And these are annual rates that they charge. So the low rate was somewhere around 3 for 30 years. That was the low. The low for auto loans was a little under 5. The low for personal loans was somewhere around 8. The low for credit cards was probably somewhere around 12. Now I can attribute that that's not the low because I had lower credit card loans than that. I think it was like sevens for one of them. But anyway, but if you look at it, they've spiked. So 30 years, somewhere around seven. It's actually probably higher than that. It's probably 7.5. Auto loans are somewhere around 8. Personal loans are somewhere around 12.5. And then credit card debt somewhere around 22. I'm pretty sure it's more than that because I have good credit, and I think my rate's like 30%, even though I've never had an issue. So they're just trying to just stroke people now. They're just they're just gouging people because they can. But the point is if you're looking at this, rates are spiking, and this is going to impact a lot of people. You're going to start to see a lot of credit card debts. You're going to start to see foreclosures and bankruptcies over the next year or so. I'd say probably mid-year, you're going to start to see some economic factors tick up in these areas because people are running out of money and they're running out of credit. So just be aware that even though the recession is not imminent, it doesn't mean that it's not going to happen, and you just have to be aware because the stock market right now is feeling a little bit too bullish for me. It feels a little bubbly, and it doesn't mean it can't keep going higher, but you should have one foot on dry land at least. Even though you can watch the market go up, at least have one foot on dry land so that if something happens, you can manage your risk. So, Phil, final thoughts from you.
So a couple things I want to bring up. When I think about that first chart that you showed, people's concern about the election, there's a lot of recency bias that comes in there too. And what do I mean by that? What are people hearing about now? We have an election that is not that far away. It's 8 months away, 7 months away, but it's in the news a lot. There's a lot of stuff going on. So we hear about it. So just the fact that we hear about it, oh my God, that must be something that we have to worry about. That's what happens. We take what we hear now, and that's what we get fear around that. And that's doesn't mean I'm not really that worried about the elections either. I don't really factor it in that much when I'm thinking about how I invest because I've seen the data. And as you said before, it doesn't really have a big impact. The other thing that I just want to add, because I've seen this, the credit card industry and those rates, it's so predatory. And it's even worse because I've seen cases where people have credit cards with all that interest on them, and they have their total combined credit card lines are more than their income. How does the system even let that happen? That just should never happen because that's somebody that's not going to be able to pay it off. If they owe more than what they earn, how can they ever pay it off? And then you got these ridiculously high rates. So then it puts somebody in a hole. They probably did it because an emergency came up and they had no other choice. And it's nice that there was something there to help them. But then they have these really high rates. And unless their fortunes change, they're now in this spiral where they're never going to be able to get out. And that's what our system allows. And part of the reason that my firm is called Apprise is because that means to inform. And the whole system that we have, people just we don't teach people financial literacy. And it's really a shame because it lets so many of these things get out of control. And then you have people and companies that are willing to and able to take advantage of it. It just doesn't seem right to me. As for me, I work with people who are experiencing big life transitions because I know they can be stressful. And my job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm's Apprise Wealth Management. We'd love to get to know you. If you'd like to learn more about us, you can download our free ebook, How to Flourish Through Life's Big Changes, at apprisewealth.com/ebook. And you can also sign up for our blog. Thanks for having me today, Kirk. Enjoyed the conversation.
Yeah, thanks for coming on, Phil. And before we wrap it up, I wanted to culminate at least a year of waiting for SBF, Sam Bankman-Fried. I'm reading some of this from a law firm press release, so if it's incorrect, don't hate me. But apparently, Sam Bankman-Fried was sentenced for 25 years in prison, 3 years of supervised release, which I guess means he's out in 3 months on good behavior. Ordered to pay $11 billion in forfeiture for his orchestration of multiple fraudulent schemes. He's the founder of the cryptocurrency exchange FTX and trading firm Alameda Research, misappropriated billions of dollars of customer funds deposited with FTX, defrauded investors of more than $1.7 billion, defrauded lenders more than $1.3 billion, and found guilty on 2 counts of wire fraud, 2 counts of conspiracy, blah, 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 blah. Okay. So I just wanted to read that because people have been kind of waiting around. It's like, all right, what are they going to give him? They gave him 100 years because they could. My understanding is they gave him extremely light sentence on this scale. Like 25, I think, was the low end, and 100 years was the high end, based on. But they had a lot of latitude based on the crimes he was convicted of. Ordered to pay $11 billion in forfeiture. Okay, yeah. What's he going to do? He's going to have another Ponzi scheme. Not to say that he committed a Ponzi scheme. I don't want to get myself in trouble, but he doesn't have to commit a Ponzi scheme in order to get $11 million to pay back that. I mean, what kind of ridiculousness is that? I mean, I have to ask. I mean, because I think when Alex Jones was convicted, I think they said that he owed like $100 billion. I don't know what the number was. Some crazy number. It was like 100 times like the highest number ever, and it was just to make a point. It's like, what point are you making? Like, is the point that the legal system is corrupt? Because that's not the point. The point is the legal system is supposed to be about fairness, not about making a point. I get it, and like I'm not commenting on crimes or anything like that. I'm just saying, like, is the legal system really a political arm now that the point is to make a point? I mean, I look at this and there's a lot of things wrong with the whole FTX kind of bankruptcy or whatever, because crypto's gone a lot higher since, and a lot of people are complaining. They're like, hey, wait a minute, we should be getting our money back because crypto went through the roof since then, so we should be getting more. And it's just, good luck to those people, the trustees in charge of that. So that's a lawsuit waiting to happen right there. Anyway, I just wanted to talk about that because that's kind of a culmination of a lot of people waiting. It's interesting. I'm sure plenty will be written about it. I'm not a legal scholar, so I'm just reading the press release, and everybody can make of it what they want. But anyway, so we're going to wrap it up here. So that's the show for this week. Thank you again for joining us on Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisor Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast and the podcast app if you're choosing. You can also check out the show at moneytreepodcast.com. On our website, you'll have access to the show notes, resources, and the archive shows. Also, we're now on YouTube. Please check out our YouTube channel. If you're there, say hi. When you're there, please subscribe and leave a comment. Lastly, please leave a short and comment on the podcast app of your choice. Oh, and don't forget, do your own research. This show is for informational use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, and do not consider this advice. If you have any problems with the show, I blame Putin. Please send me an email and express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller, or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. And one more thing. I'm not a legal scholar. Please don't take legal advice from me on this episode. Please disregard everything I said because I'm sure something in that was wrong. Anyway, have a great week ahead. And remember, no one will care about your money like you do. So invest in your life.